See this? A single cent, 1 penny. It's the reason why US bank stocks are rising today on the opening day of the second quarter earnings season. JPMorgan, just behind me, delivered earnings per share for the quarter of $1.55. That's up 1 cent from $1.54 in the same period a year earlier. A single cent of earnings growth is not much to write home about. But in the context of very low interest rates and very turbulent market with Brexit and with the threat of a slower growth in China and the US, the two big engines of the world economy, it's not too bad at all. Consensus forecasts from analysts were for $1.42, so JPMorgan's well ahead of that, even though it sort of cheated to get there. It raided its reserves for litigation losses to take a $430 million benefit. What pleased most analysts is that the core of the bank is in pretty good shape. Bond trading revenues in particular were up strongly. Equities were pretty flat and M&A was down a fair bit. But overall, it was a decent picture. And in the retail bank, you've got strong growth in mortgages, you've got decent performance in credit cards and car loans. So overall, the picture is fairly good. So the bar's been set quite high for the rest of the big banks as they follow with their second quarter reports in coming days. Citigroup, Wells Fargo, Bank of America, Morgan Stanley, Goldman Sachs, they'll all have to do as well as JPMorgan if they want their shares to respond in the same way. That's going to be tricky, of course, while interest rates are so low and while the prospect of rises this year is so dim. That's why for now, the big banks will be grateful for all these pennies. Ben McClanahan, Financial Times, New York.
Something strange is happening in Japan, Sweden, Switzerland, and the Eurozone. Official interest rates have gone below zero.